So guys, do you ever wonder what can I invest into in my stock portfolio to improve the return of the portfolio? Well, today we have Skyworks Solutions, a company that's just released recent results, and the analysts have got very strong forward sentiment about the growth of the company's earnings. So we're going to find out today, is Skyworks a company that's like winning the lottery that goes to the top of your investing wish list, or actually is it just another pump stock? So let's start. Stock review show. I want to start with the headlines, guys, and then dive into some of the numbers. So the headline for the second quarter earnings for Skyworks is, as you can see on screen, the expectations were exceeded, but only slightly. EPS was a 1.5% beat and revenue was just in line. So we flip over to the Motley Fool, and they describe it as an ugly quarter. Now that's a little bit of an exaggeration, but they were expected to have a decline in some metrics. They managed expectation well, and they've done, as I say, slightly better than expected. And what they said here is about 2/3 of the revenue come from Apple products, iPhone, iPad, others, and we'll see further on that around a third comes from Android products. Now, Apple has just done well, but in fact, Android has done not quite so well. And Qualcomm, which is another chip maker, has also indicated this issue for Android. So some of the numbers are still going to be going down for the rest of this year, but then improvements are expected. Now, despite this, the numbers are actually very good. And if we look at the summary here, this is a profitable company, free cash flow of $1 billion, high free cash flow margins, and they have repaid 200 million worth of debt. So things that are very strong indeed. I do note there is an acquisition that needs to be paid back. So there is quite a bit of debt to be paid in near future. Now that we see that, we can look at the metrics, and I'm looking very closely here at the return on capital. That return on capital has been beautiful. This is the ability of how well a company invests its money to gain further return. Very important metric. You can see it was over 30% for many years. It has dropped off to just below 20%. Gross margin, however, does remain consistent, just below 50 or around 50%. So that's a very strong signal. And if we have a look at those operating margins are still strong in every year, around about that sort of 30% plus or minus a few percent. So strong operating margin, profitable business. If we have a look at the free cash flow change, see that free cash flow over time, the general trend is up, and most recent trailing 12 months, it's over $1 billion. The company itself has a market cap of around about 15 billion. That's quite a decent ratio between the two. So the quality of the company is good, and yes, short-term things are looking slightly worse, but that is always the time to take advantage because a long-term investor, negative year or negative quarter, the company's still performing strong in underlying metrics, good time to pick the company up. So let's have a look at the price action, and this is the price action last year. So full disclosure, I own a position in Skyworks. I bought around this time at 91. You can see it very quickly went up to around about 120, so I was pretty pleased with that. But then it has come all the way down below 100, so we're 97, so it's almost back to where I started. Now that we've seen it's a quality company, but I would like to know, is it likely to fail? We're looking at the financial health. We've seen that there is some debt around about 2 billion, but debt to equity ratio there around about 35%. Pretty strong indeed. That balance sheet looks absolutely fine to me. Their current ratio as well, we need to see if they can pay their short-term bills. Although the current ratio is low that has been in the past, it's still incredibly healthy at over 2. Their interest cover is 23 times, which is absolutely solid. The Skyworks is a good quality company, low chance of failure, so we need to see what the valuation's doing. And the free cash flow yield, I can tell you, comparing the latest free cash flow to the market cap, is 8%, and that's pretty high. Very few high quality companies in the market have an 8% free cash flow yield. Now, if we add that free cash flow yield to the future growth, we can estimate the potential return. And that's what we're interested in. Can we hit our long-term portfolio goals from investing into Skyworks? Now, according to Simply Wall Street, they're saying around about 14 to 15% earnings growth per year. That's a very bullish sentiment, very high numbers. Over to Yahoo Finance, they're saying 15%. Now, I'm going to be a little bit cautious here dial that back to 10%. I think 15% a year for 5 years is a very strong performance if they pull that off. But let's go with 10%. And then if it does end up being 15%, we've got massive upside. So therefore, one measure of the projected return is the 8% free cash flow yield plus the 10% year growth. So that is 18% per year. I'm not saying that will happen. That's just an estimation. None of this is investment advice, merely my opinion. And there's another method. Let's look at discounted cash flow. I've taken their most recent free cash flow figure and then use that 10% year growth rate, and I've compared that to two discount rates, 10% and 15% a year. So I estimate the potential return range, therefore, with the discounted cash flow minimum of 13.2% a year. So I'm saying, therefore, if I were to buy Skyworks solutions, according to my analysis, it should return, in my estimation, somewhere between 13.2% and 18% per year for 5 years. And it always comes with a health risk because it's forecast, and of course they're very reliant on those Apple and Android devices. So if there's any issues outside of their control in that area, that could have impacts, whether positive or negative, on them. So for full transparency, here is my position. And it's quite a small position, just 3 shares, which is 0.5% of my portfolio. I think at the time, in retrospect, I wish I'd bought more. The opportunity has arisen to do that. So I'm going to add to this position, at least double it, possibly treble it to maybe 1.5% of my portfolio. It's on ShareSite, by the way. Check it out below if you want to get on this platform. I can offer you a 10% discount through my link. So Skyworks might be a buy for me, but it really got me thinking, are there any other companies out there in the big wide world that could actually return 10% a year plus as well? And I think there are. And one of them, found by clicking here.